Hey, it's Larry Gaines from Options on the Open. We're the leaders in option day trading and swing trading. And in this video, I wanted to go over how we analyze the market and kind of come up with a market trading plan. So basically, I use a top-down market technical analysis. And for my career trading 30 some odd years, I've always looked at the macro picture. And to do that, that starts with top-down. This method of analysis allows a trader or investor to analyze the markets from the macro big picture all the way down to the short-term or intraday. So that's how we start. We start with the macro big picture. And then next, let's go to the next slide. So how is this analysis helpful? Because top-down approach begins at the top, the first step is to determine the macro big picture trend. And at Options on the Open, this is pretty easy because we use our power cycle trading model. This is a cycle model which is pinpoint accurate at signaling tops and bottoms of market cycles. And we can use this model across all time frames. So once this trend is established, then as an investor or trader, you can plan on how to allocate your capital for either your investing or, if you're a trader, for your trading. If you were like in a, say, for example, in an uptrend, you would probably want to be more aggressive in buying market dips and holding for greater returns. And conversely, if you're in a downtrend, you'd want to be less invested with a larger cash position. You would be more defensive with any buying and more short-term in nature with your profit targets and tighter stops. So if you have a good macro view and a good system that shows you the trend, then you can establish this type of trading plan or investment plan. Now, in my top-down analysis, I use 5 different time frames. So the first time frame is the macro market trend, and I measure this by using the monthly time frame. The second time frame is the long-term market trend. I measure this by a weekly time frame. And the third is the medium-term market trend, measured by the daily time frame. Then the fourth is the intermediate term market trend, measured by the hourly time frame. And then for short-term trend, measure that by minute time frame and even tick charts and time frames. Now, where are we currently? The current top-down market analysis, which is I'll use based on the S&P 500, the SPX, and using the power cycle trading model. So number one, the macro market trend. The market trend is down. The power cycle trading market our model signaled a downtrend this past July of 2011. But currently it's giving an alert of a possible cycle change, so I'm watching it very closely. But currently the trend, or the macro trend, is still down. The second, the long-term trend, based on the power cycle trading model, is in an uptrend. And it went to an uptrend basically around October 10th, 2011. But the cycle uptrend is starting to stall. Third, the medium-term trend. The power cycle day trading model has the daily trend currently up. The intermediate trend, the power cycle trading model has this trend up but overbought and giving an alert of a possible or potential cycle change to the downside. And the short-term trend has the cycle trend currently down. So, using the top-down approach, step by step by step, this is currently what we're seeing. Now, this is what it looks like, visually on a chart using the time frames that I just went through with you. And here's the monthly. Here's the S&P 500 or the SPX, and here's the monthly. And this is approximately right here is where the power cycle trading model signaled a cycle turn to the downside. So you can see it pretty much almost pinpointed the perfect top. And just to illustrate with the trend line, you can see that the market's had a big bounce from this low to high, and it's potentially breaking back to the upside. but the current power cycle trading model is still showing the trend in a downtrend, and could easily just slip right back down. Now here is a picture of the long-term trend using a weekly time frame, and you can see each bar here represents one whole week of trading. So you can see back in July right here, the trend power cycle trading model signal a cycle change to the downside, and you can see how strong it was. We've had a bounce, but we've come back to this descending trend line, and we're still in a macro view trending down, but on the weekly, our longer term trend has been up since October. Now here's the medium term trend as measured by the daily, and you can still see this descending trend line based on these daily highs. You see the highs are getting lower. We've come in here, we had a breakdown here, but the daily, currently the trend is up. However, it's running into major resistance, where you can see here's this descending trend line. You're going to get a lot of resistance here and a lot of resistance here at the 200-day moving average, which comes in about 1264. So we had this huge move up here this past week. The markets are giving back a little bit, taking a breather, but the daily trend, or the intermediate or medium-term trend, is up. This gives you a picture of the intermediate trend based on a minute chart, and on this I will use a 240 minute or 60 minute, but you can see that the cycle trend is up. However, we're getting, based on our model, into an overbought situation, and it's currently giving an alert of a potential cycle change back down. So this is currently in a trend up, but potentially the cycle change may move back down. And this last chart is just to show you, kind of on a shorter term time frame, the short term trend, and this is currently in a downtrend based on our power cycle trading model, and trending down. So you can see how they all fit together. So basically, I hope you got out of this video how the top-down analysis can help you to analyze the market and establish a trading plan. We have the benefit of the power cycle trading model, and we use this across all markets and across all time frames, and we use it on all of our intraday day trading. So if you'd like to learn more about how we trade and help you navigate through these vicious times with this high volatility, please come join us at Options on the Open. That's optionsontheopen.com, and good luck trading this next week.